So VIX up, market up is generally a signal that the gains are happening too quickly. Today was a fascinating day in the options market. It's one of those days where we really felt that the options market was driving price action. And we just kind of want to lay out what we saw today in terms of this big rise into the 4250 area. And then we spent all day just kind of puking and giving that back right back into 4200. So if you're a subscriber to SpotGamma, in our morning note, we always cover our key levels, right? And our major resistance level is called our call wall. That's 4200 for today. And we state right at the top that even though the futures were at 4220, so they're over that 4200 level, we said, look, we consider moves over 4200 as overbought. Now, there could still be a resistance line or two over there, but the general trend is this market is too high. These gains have to come in. The market has to consolidate and rebase, and then maybe we can go higher if this call wall shifts up. But again, the call wall for today was 4200. Now, one of the cool things you could do with our SpotGamma data is we have an indicator, and you could paste that indicator into TradingView, and you could see these are our key levels for today layered into the chart. So you can see that we have this implied move. Back to our note, you can see this is our implied move for today. And so when you look at the implied move, you say, okay, this is the max upper bound of what we think should happen for the day, right? Based on the amount of gamma in the market. Well, you can see that that level came in around 42.58, and that is basically the high for the day. So the market sort of gaps open, it rips to this level, and then this interesting thing happens, right? The VIX starts to go higher as the market goes higher. So VIX up, market up is generally a signal that the gains are happening too quickly, right? And this also goes for meme stocks, right? You'll see Tesla rip and the vol and Tesla rip higher. Stocks are crashing up and away. That generally tells you that the price action is not stable when it is going higher like that. Generally, again, the VIX, as you all know, the VIX goes down as the market goes up. But in this case, clearly, the VIX trended up all day as the market was gapping up. So we take that on its face to say, okay, look, it must be excessive call buying. But when you look at our hero indicator, what's kind of fascinating, this is our hero indicator. If we bring up the spiders, you can see what happened as the market ripped up into the 425 or 4250 area. The deltas are very sharply negative. And what that is telling us, if we actually open this up, you can see that what happened was the response to this opening rip was for people to buy puts right off the open. People were buying puts. And it also turned into call selling a little bit later. So you end up with this big negative delta response that pressures the market lower. And to us, you combine the fact that we thought the market was overbought, right? Because it was above our call wall. That's our gamma positioning. And then we had this intraday data that says, look, traders are selling into this rally. Either way you look at it, whether you're selling calls, you're buying puts, you're selling, right? You're positioning against the market going higher. And that was a big indicator for us. We tweeted this in real time that, look, this divergence is taking place. And what was unique about this divergence, it was put buying. What we've seen as the market's been kind of gapping higher over the last couple of days is that people would sell calls, the market would consolidate, the market would rally again, people would sell calls, and we get kind of this mean reversion, right? But in this case, it was very distinct call buying pressure off of that open. So it was really a fascinating exercise. The options market, we felt really, again, controlled things. If you'd like to try any of this out, you want to see our daily notes, you want to try out here, all of that, all you have to do is you hit subscribe now. You get a free 7-day trial. And we write, again, 2 notes every single day. You get access to our hero indicator, which shows you the real-time options flow. And then you get access to our equity hub, which shows you key options metrics for over 3,000 different individual stocks.